All right, hi everybody. I'm Josh. It is Thursday, the third Thursday of the month, and Amber is almost here. She was out on special assignment, getting extra details for tonight's live stream. So really, we're gonna just talk about what's been going on. I'm sure if you've seen, the news or Good Morning America or whatever. I mean, there's lots of information about it's a great time to buy. It's a terrible time to buy. Housing prices are up. Housing prices are down. Interest rates are up. Interest rates are down. So, of course, we'll also talk about next week. We swear in a new president. I know there are some of you on here and some of you that I have personally spoken to that are just waiting for that. Like it's going to be a magic wand that as soon as Trump's, sworn in, like rates are just going to drop. Which we'll talk a little bit about that too, because that's not quite the way things will go. He's not going to change rates. Again, I can't believe it's the third Thursday of the month. It's absolutely crazy to me that we're already this far in to January. So, well, I guess, kind of what we'll start with is, I wanted to actually show just a couple systems that we use or just sort of what's going on with mortgage rates because, you know, a lot of the news is it tells you what's already happened, right? It tells you like rates went up, but why? Or why did rates come down? So we've had a couple sort of major things this month so far that have been rate movers. We had jobs numbers last week on Friday. Jobs came in very hot. There was 100,000 more jobs than projected. So Friday was not a great day for interest rates. Between myself and others in on the mortgage side, it was sort of it's almost like a warning sign, like, hey, like rates are gonna jump up a little bit. Everybody was a bit pessimistic because, so far there isn't really a ton of financial news from Christmas through the beginning of the year. I mean, a lot of the markets are closed, so it's really sort of quiet. So the jobs numbers Friday last week were the first really big financial news that came out. So yeah, so rates spiked up Friday. We were a little bit pessimistic going into this week. Yesterday we had CPI numbers. And the expectation was that CPI may tick up a little bit. There we go. Hey, Amber, how are you? There we go. She was on special assignment getting all the data for our chat tonight. But yeah, so we had CPI numbers yesterday. And it was going to be one of those things if they came in low, or even if CPI even came in normal, like it was going to be decent. It would stop the bleeding was sort of the thought. If it came in high, it was going to be really a bloodbath. So it actually came in as expected. But the bond market's really rallied. I mean, it was one of those things where it came in as expected. I'm not going to read it to you, but the important part of it is here. So monthly core CPI, it was 2.2% versus 0.2% forecast. It was 0.3% previously. Unrounded, it actually was a little bit lower than the forecast. So it was at 0.225%. It was expected at 0.240%. If you look here, annual core CPI actually ticked up. So it was 3.3 previously. It was forecast at 3.3, came in at 3.2. Now, I'm not going to get into super nerd mode about this as much as I would like to, but essentially, annual core CPI ticked up a little bit, but it wasn't a huge market mover. Like nobody cared, I guess. So this was yesterday. So yesterday was like, okay, this isn't bad. But this is actually what I want everyone to see. This was the headline today. And you could see the like 2 straight days of gains. Like, what is happening? So retail sales came in today, and we've not had back-to-back good days. I mean, in some time. I mean, a lot as it relates to mortgage rates. You have a good day, a bad day, a bad day, a bad day, a good day, a bad day. It's just sort of the normal flow of rates. It's not all down or all up. It's usually, it's usually hit or miss from day to day. So it's been a while since we've actually had 2 straight days for them to even put this as a headline with exclamation points. Um, Retail sales came in light, or they were 0.4 versus 0.6, which is, if you think about it, retail sales is on the previous month. So last month was Christmas. So for retail sales to be down, that's actually a good thing for the markets, and at least for the mortgage market. So we actually got a little bit better today. So doesn't mean rates are going to be awesome tomorrow, but what you see on the news and what you hear sometimes, even for us. I mean, Friday, I was personally a little bit pessimistic on what was to come. And this week's actually been pretty decent. Now, tomorrow, something could come out and it could get worse. We could have 3 straight days of gain. So my point with all this is the interest rate you see today. Like if you talk to me or talk to a lender today and you get a rate, that could be vastly different in a couple days. So the key there is, making sure the payment is in a range that you're comfortable with, but also dealing with a lender or having a good understanding that, the payment's going to be in this range. The rate is going to be in this range, because until it's locked, you're not locked. So if rates change tomorrow, they change tomorrow. One thing I want to touch on there is with as many lenders as we have, we tend to lock, and then if things improve, we renegotiate versus you're just locked in. So oftentimes we're going to allow you to set the ceiling for the rate, but not the floor. So if rates do get better, then you can take advantage of that as you go. So that's the short term. Sort of long term, that we were rolling into this year that there was supposedly going to be 4 rate cuts this year. The Fed was going to cut rates 4 times this year. Their dot plot in November, or excuse me, their dot plot in December was, they changed it to 2. So now there are 2 expected Fed cuts this year. Depending on CPI, which is inflation, retail sales and jobs, that's really going to dictate what they do. There may be no rate cuts this year. I mean, rates could stay pretty flat throughout the year. So for you as a buyer, and I'm not trying to be pessimistic here, like welcome to 2025, rates are going to be bad all year. But there's not going to be a huge change next month necessarily, or the month after. Now, obviously, financial news changes. We could go to war with the country and rates could vastly change. But between the financial news right now, and the reason I wanted to show this is there's not going to be a day where I'm going to call anyone and be like, hey, guess what? Rates got a percentage point better today. The gains are slow, methodical, up and down typically. If there's a quick change, it's typically faster to go up than they are to go down. So they get worse faster than they get better. So if you're thinking like, is this the right time for me to buy a house? Like, should I be buying a house right now? Should I wait? Like, why don't I wait till the summer? And Amber, I know you can talk about this a little bit too, about what's going to happen with inventory when rates get better, or if rates vastly improve. But really the key is now if you're ready, like you've got the income, you've got the assets, you're ready to go. I don't want to say the rate doesn't matter, but the rate could be the exact same 3 months from now. And the only difference is you miss out on the house that, could have been your perfect house kind of thing. So if you think you're ready, talk to us, and you're going to hear that. I think that's going to be a theme that they're probably going to hear a couple times, Amber, from us through this is, if you're not sure if you're ready, if you're not sure it's the right time, then let's chat.
We're still seeing an increase on average days on market. And kind of what does that mean? It just means that homes are sitting longer. It doesn't mean they're overpriced. It just means that they're sitting longer. Buyers are able to kind of look at a home, go home, sleep on it, think about it, and then come in with an offer, which is nice, compared to a few years ago. It's my opinion that it's more like pre-COVID times. I was just pulling up a stat. So I just pulled this up. This is for a listing here in DeLand. It's in Northwest DeLand, almost in the DeLeon Springs border. So my neck of the woods. The home itself, is here, 2330 Chapel Hill Drive. It's been on the market since August. They started high. So right here, they started at 440. So it's probably overpriced. They got on the market probably just a couple months too late, the end of summer. They took a couple price cuts, and now about a week ago, they came down to 374. So I was just looking at this home because I have a buyer that wants to go see it. And so what I did was pulled up our market condition report for it. And essentially just a whole bunch of blah stuff, but this is the market conditions. This area here is what I wanted to kind of show y'all is just kind of gives us an overall inventory analysis, the prior 7 to 12 months, 4 to 6, and then the current up to about 3 months ago. So your overall trends, and this is for a home in the 32720 zip code. So if most people don't really know, DeLand goes into 2 counties. Most of DeLand is in Volusia County, but we also go into Lake County. The 3272 zip code is in Volusia and Lake County. So, we can't just separate the zip codes because there's also a 32724 zip code that's only Volusia County. But, anything kind of close to the St. Johns River is the 20 zip code. So it just kind of throws things off. I tried to go and do it to a county, but it wouldn't let me. It's technology. And then the house itself is right around 2,000 square feet. So it goes a few hundred square feet on either side of it. So we're looking at anything from 1,700 to 2,400. And then the report was pulled to today. So the number of comparable sales, so similar sized homes, age, everything with the homes. About a year ago, we were at 57 for the month. And about half a year ago, we're at 31, and now we're at 34. So we're seeing a little bit of an increase in there in actual closed sales. The absorption rate, this means if for every house that there is on the market and every buyer actively looking on the market, and there were no new houses to come on the market and no new buyers to come into the marketplace, this is how many months it would take for us to sell every single last house that we had. And this is the part that will help values come down a little bit, I think. So good on the buyer side. We've increased to 11.33, so almost 1 full year. So during the COVID times, we were at a month or less. A year ago, it was just under 10 months. So we've gone up about a month and a half to absorb our value, which that's, something that does affect your days on market, and it affects your values. Comparable active listings. This is actually not too bad. A year ago, we had about 100 listings on the market, so it's kind of slow. And then right now we're at 112. Over the summer, we had 130. So we're actually doing better right now than we were last year with the inventory, so more for you to choose from. The months of housing supply, which is the total listings, absorption rate, all that fun jazz again. We're getting better with it, so that's good. And then we come down further, medium sale price. And again, this is for the similar type house that's currently what's listed. It really, we saw a huge dip in it over the summer, and then we're getting back up there a little bit. So right at 380 for average. And then this is the days on market kind of that I was saying this time last year into like the early springtime. Florida, our winter is usually pretty decent sales because we have snowbirds that come down, decide they love it, and they're never going back home, or they just want to buy the house to come down to every year. So it was 20 days on market, and that means before it was sold. And then over the summer, we're at 56, and right now we're at 59. And if the house is priced a little high, or if the house is not totally move-in ready, brand new roof, brand new air conditioner, like brand new floors, everything, like you're walking into a model, the days on market's taking longer. So that's where we're able to get really good deals for our buyers. So don't be afraid of a little sweat equity. And then just all the rest of the stuff, pretty much your median sale price, the list price is 99%, which is still saying that once real estate agents and sellers figure out that right price that house is worth, you're still getting pretty much a full price offer on it. So it just is taking a little bit of time sometimes to whittle it down or to find the right buyer, because every house does have its right buyer. And, it's up to you to choose that house that's right for you when you're ready. All right, I'm gonna stop sharing now. That's my nerdy part. I'm not as good at the nerdy part though.
No, that was great. That was very
Did you
nerdy.
like it? I had numbers this time.
Yeah. The numbers, and yeah, it was wonderful. Wonderful. So now are you seeing as it relates to like the, because I know, our last one of these was in November. So, the settlement, and it was like we were still kind of early in sellers, paying compensation or not and all that stuff. So have you seen that really have much of an impact, or is it just sort of status quo?
So, I've seen it have a little bit of an impact. Some buyers choose not to see a home if the seller's not paying a compensation. And a lot of that has to do with well-informed buyers that have actually gone through the pre-approval process. And like Josh, you've been like, hey, this is how much money you need for closing. And you have your buyer agent agreement with your realtor. So that means you'll be responsible for that amount. But you only have this much cash in your bank. So you're not going to be able to cover that. So you're going to have to make sure the seller can cover that. Like that's part of us working together. I
Yep.
actually had one seller that chose to offer very minimal amount, and to each his own. And he actually came back because we're on the market for a couple months, and he's like, Amber, how can I get this sold? I don't want to reduce the price. And I was like, no, you're priced right. I said the feedback has been the buyers have chosen not to see it because you weren't offering a compensation. That's totally up to you. And I always tell everybody, I don't like my buyers to be scared off by that, because you also have sellers that are like, yeah, we'll consider anything, put it in the offer. And we can always write it in the offer. We have it's a separate addendum called a compensation agreement.
Okay.
And that's where we ask the seller to cover it. So it's never not worth seeing the house, because if you want the house bad enough and if it's the perfect house for you, odds are we're going to be able to make it work, especially if it's been sitting on the market for a couple months.
Gotcha. Gotcha. Okay, very cool. Yeah, because we're of course getting a lot of those documents now on files on the loan side, which doesn't necessarily affect us as much, but of course we've got to disclose it as part of the loan estimates and all that kind of stuff. So yeah, I mean, really, we've seen some that are paying, a 0.5% less or something like that, but I personally haven't seen any where the seller's paying nothing. You know what I mean? That's come through. Usually and sometimes it's negotiated, like you said. Sometimes it's like, hey, they weren't going to, but as part of the offer, that's kind of where everybody ended up. So,
And the
so
good thing is, like, it's just like getting our closing costs covered. Let's say we had a house listed at 300,000. The buyer really needs to have 5,000 in closing costs covered. So we decide to offer 305 and have them cover five, or
right,
we somewhere in between. So if the house is worth that, and if we can get it covered, there's usually always somewhere to make it work, so that the seller's still getting exactly what they want and the buyer's still getting what they want, and they're not overpaying for the house at that point either. It's That's why having the well-informed realtor working for you, and why the buyer broker agreements, and when your realtor sits down and says, hey, like, Mr. and Mrs. Smith, we're going to sit down, we're going to have this conversation ahead of time. Here's what I can do for you, here's what I expect of you, here's what I charge. That's why it's good to have that conversation, and fully understand that there's more to it than us just opening a door for you. At least most of us that like our job.
good clarification. Most, yes, yeah, but yeah, I mean that's really what we're looking for. I think as a buyer, out there in the market is someone's being upfront with it, and that's what I like about the buyer broker agreement, where it's like, look, here's all the cards on the table, and then you can make informed decisions. Because as I like being detailed and having all the facts so you can make a good financial decision.
Yeah, hands down, and there's always discount brokers out there to sell, to buy, flat rate, there's always that out there. You get what
Yeah,
you pay for, and that's all it is at the end of the day. And you want to choose who's best for you. I'm looking out for you best. Just, same with the lender side. And that's why I appreciate you so much, because you're upfront with it all. So
right.
when you give that pre-approval out, you've looked at frontwards, backwards, and sideways. And as long as nothing drastic changes with the credit, or, opening new accounts or quitting a job, we're going to make it to closing, and they're going to get exactly what you told them they're going to get, and they're
Right.
going to get a house and start to build their life in that house, so it's awesome.
Yeah, absolutely. Absolutely. So, yeah, so I mean that's sort of state of the union now. I think, projections for this year, again, we get a new president next week, which that's exciting, and it doesn't necessarily mean rates are going to change. I mean, everything's on our end is really just going to be predicated on, at what inflation does, what jobs and retail sales. I mean, yeah, I mean, there's obviously a lot more that goes into it, but those are the big things. Regardless of what the market's doing, it's always a good time to buy a house. Well, and I'm sure I've said it before. I know you have
If
too.
you can keep the house, I think for 5 years, give or take,
Yep.
and keep your job and make your payment,
Yep.
it's a good thing.
Yep. Best time to buy real estate was 5 years ago. It's like best times right now. You know what I mean? Like and I see it so much with properties that people own where it's like they'll come to refinance and we'll appraise it or do like a valuation model. It's like, holy God, like that house has gone up a ton,
Yeah,
and they haven't done
awesome.
anything but live there and
No,
pay
better
their
return
rent.
than the 401k half the time. So
Exactly. Exactly. Yeah. So that's Amber with Gold and Sapphire Real Estate. We finally
woohoo.
got that right. And then I'm Josh with Simplified Mortgage. So I appreciate all of you joining. We will have a recording of this that we'll put up after. So if you missed it or you're just seeing the end of it on Facebook, then you want the actual recording. Amber will be putting that up at some point in the next day or two. And then yeah, we will see you next week for the third
Next
Thursday.
month,
Oh yeah. It's gonna
February
feel like
20th. It'll be after Valentine's Day. So make sure you
okay.
guys, buy your loved one a house for
There you
Valentine's
go.
Day.
Yeah,
We still have
exactly. You know
time.
what?
We get you in under contract by the end of this weekend. We can close before Valentine's Day, right,
There
Josh?
you go. Valentine's present is keys.
Yeah.
Yeah. Oh yeah. No, you get under contract by tomorrow. I can close by the end of the month.
Yeah.
So definitely by Valentine's. So yes, we will meet next month. It's gonna feel like next week, but it'll actually be next month. So but yeah, thank you all for joining, and we will see you next month. So
Hi.